You're listening to CFRN, the Christian Financial Radio Network.
Good afternoon, traders, and welcome back to the CFRN Emini Futures Cast. This is the daily broadcast of Indeterminate Length, where we discuss all things Emini, along with some really big ideas on the finer points of trading gold, bonds, crude, sugar, the euro. Joining us today, Mr. Michael Borth. From our trading desk in Chicago, Mr. Burton Schlichter. Now, to get things started, let's go to our host and founder in Studio A, overlooking South Mountain, America's largest city park. Here's Dwayne.
Good afternoon. Welcome back. Today is Tuesday, 11th day of November, 2025. More importantly, it is Veterans Day. And I should have had some patriotic music ready to play. I'm sorry. Happy Veterans Day to all the men and women who so bravely gave their lives for the freedoms that we enjoy here in America, the greatest country on the face of the earth. I don't care what the Democrats say, it is. And if they're so unhappy with it, maybe they should go live somewhere else. Thank you for your service. And thanks for joining us today. Whoever you are, wherever you are, we're just glad to have you right here, right now. We do 2 live broadcasts every trading day. Now, the first broadcast is our live training room. That one's private. Got to be one of our traders or taking your 1-week free trial. If you've not yet taken your 1-week free trial, when Michael joins us at the top of the hour for a recap of the live training room and a little live trading, he will walk you through step by step how to take the trial. It'll take you about 3 minutes. We'll get your indicators up and indicating today. Your trial will officially start tomorrow and run all the way through next Tuesday. The weekend does not count against you. And drum roll please, there's no credit card required. Nothing. We don't need your mother's maiden name, your favorite pet. Just do what Michael shows you how to do. In 3 minutes, your indicators will be up and indicating. And again, your trial will officially begin tomorrow. Now, you're not just getting access to the live training room 2 hours a day for 5 days. What happens is for 5 consecutive trading days, we treat you like you were already a member. We give you access to everything. We don't just work 2 hours a day. No, we work around the clock from Sunday night at 6 p.m. Eastern to Friday afternoon at 5 p.m. Eastern. All the alerts, the weekly trading zones, everything, even the private one-on-one mentoring, you will have access to during your free trial. Again, no credit card required. So be sure to stick around to the top of the hour and Mike will walk you through this couple quick steps and you'll be on your way. The reason we don't charge you anything is because we want you to have a clear mind. We want you to focus on what's being taught and exploring all the opportunities. Not worrying about the whatever. Because at the end of the trial, we want you to be able to make a well-informed, intelligent decision as to whether or not trading is right for you. I'll just be honest, trading's not for everybody, okay? Good way to find out if it's for you, take the trial. Now, when the live training room ends each day at 11:30 a.m. Eastern, we take a 30-minute break and come back for this broadcast, the noon broadcast, which is open to the public. Everybody, everywhere on planet Earth with an internet-connected device. There's 2 different ways to join this afternoon broadcast live. The best way, you only have to do it once. Go to mytradingiq.com youtube.com. Scroll down the page to where it says Noon Broadcast. Click the link, fill out the 30-second registration form, and you're done. Going forward, what happens is every trading day, you get an email about an hour before this broadcast starts. In the email, there's a link. So at 12 noon Eastern, all you have to do is click the link in the email, and it automatically logs you into our platform. The benefit there is you immediately have access to the question box, so you can ask questions and participate in the discussion. Of course, there'll be days you're out of the office, away from your desktop, but you still want to join live. Maybe you're on vacation. Got a lot of vacation time coming up here, Thanksgiving, Christmas. And there'll be days when you're busy, you can't join live, but you do want to get caught up later. You can do both of those via our YouTube channel, which is easy to remember. youtube.com/CFRN. That's the Christian Financial Radio Network since 2005. Not only do we broadcast live every trading day on our YouTube channel, as we're doing right now, simulcasting, but we also archive each and every daily broadcast. Currently, there are over 2,900 daily episodes archived for your educational and viewing pleasure. And if you're new to the world of CFRN, it's a great way to get to know who we really are. Thanks to the power of YouTube, you can scroll back 6 days, 6 weeks, 6 months, 6 years, even more. Obviously, you're not going to watch them all. But again, it's a great way to see how we have evolved over the years. youtube.com/CFRN. On the left side of the screen, you see our schedule for each afternoon broadcast. So we're going to dive right into our daily devotional. That's where we start each and every day. Now, the topic of the devotional that we're in right now, it's called Sharing Your Faith. It's a 28-day devotional. I think we're in day 14. Why so long? I've been a Christian for decades. Yeah, okay. When's the last time you shared your faith with somebody outside the walls of the church? You see, when Jesus left, he didn't ask a lot from us. He told us to love God, to love one another, and to make disciples of men and women. When's the last time you discipled someone? First, you got to share your faith before you can disciple them. Our scripture today is Mark 8, verses 27 through 30. And I'll be sharing it from the NIV translation. Jesus and his disciples went on to the villages around Caesarea Philippi. On the way, he asked them, "Who do people say I am?" They replied, "Some say John the Baptist, others say Elijah, and still others, one of the prophets." "But what about you?" he asked. "Who do you say I am?" Peter answered, "You are the Messiah." Jesus warned them not to tell anyone about him. Kind of a head scratcher, right? Today's topic, the ultimate question. Questions are powerful tools to explore spiritual experiences of people and to guide them to a fuller understanding of the gospel. No question gets to the heart of the issue more quickly than the one that Jesus asked Peter and the disciples. Who do you say I am? Peter got it right when he declared that Jesus was the Christ. He didn't fully understand everything yet, but it was an essential step in the journey of faith. Too often, our spiritual conversations touch peripheral issues without engaging this ultimate question. If you want to get to the heart of the matter, ask someone, what have you decided about Jesus? That question may take you to a deeper level of spiritual conversation and may help the person take a step forward on their spiritual journey. Remember to clarify who Jesus is and what he has done. That is the heart of the gospel. Life's most important decision is about Jesus. I want to encourage you. Look for an opportunity to ask someone on your prayer list. Earlier in this devotional, in one of the previous days, we made a prayer list, remember? So pick somebody on that prayer list and ask them, who is Jesus to you? If that person does not believe Jesus is their Savior and Lord, ask if they would be open to conducting an experiment regarding him. Suggest they read one chapter of Mark a day for the next 2 weeks. Then challenge them to reevaluate whatever conclusion they originally gave you. Let's pray. Lord Jesus, you are the Christ, the Son of the living God. Help us to know you, not just by name, but through a deep and personal faith. Strengthen our hearts to confess you boldly and to follow you faithfully, no matter the cost. Let our lives bear witness to who you truly are. It's in your holy name we believe and pray. And everybody said, amen. Amen and happy Tuesday. Let me give you the numbers from around the world. Then we'll take a look at the news. Then we'll go to the charts. Starting here in the U.S. with the cash markets, or the indices as they're called. The Dow is up 314 points. The NASDAQ, on the other hand, is down 148. S&P 500 is down 7. The Russell 2000 is down 3. In the commodity basket, crude oil up 96 cents today, trading 61.09 last. That's a gain of almost $1,000 per contract traded, $960 per contract traded to be exact. It's a gain of over 1.5%. Gold is down $2.50, trading 41.1920 last. Silver up 30 cents, trading 50.61 last. In the Asian markets at the close, the Nikkei dropped 68 points, Shanghai fell 15, but the Hang Seng gained 47. And in the European markets at the close, FTSE up 112, that's well over 1%. The DAX up 136, the CAC up 100 points, 1.25%. So we had a mixed day in Asia. It was a green day for the UK, but it's a mixed Radio Tuesday here in the US of A. We got one of the major indices in the green. Big time, 314 points. but the other 3 are in the red. Now, you know how we feel about the mixed markets. Okay. As futures traders, we like to see the 4 major indices all the same color. We don't care if they're all red or all green, because as a futures trader, you can be long, short, long again, all in the same hour if that's what the chart in front of you tells you to do. But when we have mixed markets, as we do today, it's kind of a tug of war. You don't get the same follow through that you get when the markets are all the same color. So it is what it is, and we'll trade what's in front of us as we do. Turning to the global news, President Trump hosted the Syrian president, at the White House yesterday in a first-of-its-kind visit. Al-Shara, who was once a local Al-Qaeda commander with a $10 million bounty on his head, is the first Syrian leader to visit the White House since the Middle Eastern country's independence from France in 1946. Al-Shara, 43 years old, previously led the Islamist rebel coalition and U.S. designated terror group Hayat Tahrir al-Sham, which helped topple the decades-long dictatorship of predecessor Bashar al-Assad in December. Al-Shara's presidency ended nearly 14 years of civil war that displaced an estimated 14 million people, more than half of the country's pre-war population, and killed around 600,000 people. Following yesterday's meeting, the U.S. announced it will waive a majority of its sanctions on Syria for 180 days. Syria has agreed to integrate the Kurdish-led Syrian Democratic Forces, which have been the leading U.S. partner in fighting the Islamic State, into the Syrian military. For those of you, men of a certain age, who have a wife of a certain age, you might know a thing or two about menopause. Now, because women get it, why do they call it menopause? Why not womenopause? But anyway, they call it menopause. Hormone replacement therapy for women undergoing menopause will no longer carry warnings about significant health risks. That's from the FDA. The medications contain estrogen and progesterone, 2 hormones involved in bone density and brain health. As a woman's egg supply diminishes, her levels decline until she no longer produces them. The process takes 7 to 10 years on average and can be accompanied by symptoms including hot flashes, insomnia, brain fog, and an increased risk of fractures. After decades of use, the first product was FDA approved in 1942. A 2002 clinical trial cast doubt on the therapy when women taking a particular formulation in their 60s and 70s saw increased risk of breast cancer, heart attack, and stroke. In yesterday's announcement, accompanied by a JAMA editorial, FDA Commissioner Marty McCary noted subjects in the trial were past the average age of menopause, 52 in the U.S. Going forward, the medications will include advice to limit HRT usage to within 10 years of the symptoms onset. Visa and MasterCard yesterday announced a roughly $38 billion settlement in a 2-decade antitrust lawsuit with merchants over credit card processing fees. If approved by a judge, businesses could reject several popular cards at checkout. You've probably been into a little small, independent convenience store or a bodega if you're living in New York. And there's a little sign that says if you use a credit card, in some cases even a debit card, there'll be a 50 cents surcharge. And you're thinking, what? Because most people don't realize that the merchant has to pay a fee for you to use your credit or debit card. True story. Visa and MasterCard have historically required merchants to accept all their credit cards, despite each carrying a different interchange fee. The charge banks impose to process transactions. Fees range from 2% to 2.5%, with higher rates tied to cards offering shoppers more rewards or cash back. Merchants paid roughly $38 billion in interchange fees last year, up 71% from 2019, as Americans favor reward cards and fees rise. Under the proposed settlement, Visa and MasterCard would cut interchange fees by 0.1 percentage point annually for 5 years. Merchants could also accept or decline 3 categories of cards, with all reward cards grouped together. Several merchant industry groups object to the deal, arguing businesses have little choice but to accept reward cards, since they account for about 85% of cards issued. There's the global news. Let's see what Wall Street's got for us. From Bloomberg, shares of CoreWeave, CRWV, tumbled after the company lowered its annual revenue forecast due to a delay in fulfilling a customer contract. A setback for a company that's racing to keep up with the artificial intelligence boom. Sales in 2025 will be $5.05 billion to $5.15 billion, CoreWeave said during a post-earnings conference call yesterday afternoon. Its forecast range had previously been as high as $5.35 billion. Now, bigger picture, tech led a retreat in U.S. stocks today amid a revival in AI worries, sitting back from a rally fueled by optimism that Washington may soon end the record-breaking government shutdown. As we know, we just went over the numbers, the Dow is the only one in the green, or it was a few minutes ago. Testing that faith, SoftBank said today it sold its entire stake in chipmaker NVIDIA to fund its own investments in AI development. The move comes at a time that Wall Street is questioning whether the AI spending spree will pay off amid lofty valuations for related stocks. Shares of NVIDIA dropped more than 3% in early trading. Now, a little more detail on what I just said. SoftBank's U.S. depository receipts rose as much as 7.2%, while NVIDIA stock slid as much as 3.3%. SoftBank is keen to become a leading player in that growing ecosystem, with plans to leverage stakes in sector linchpins from OpenAI to U.S. chip designer Ampere Computing. Today, SoftBank executives sidestepped questions about whether the industry is fomenting an AI investment bubble and said the sale has nothing to do with NVIDIA itself, but was a necessary financing measure. The chief financial officer at SoftBank said, "I can't say if we're in an AI bubble or not, so we sold NVIDIA so that capital can be utilized for our own financing." SoftBank has sold out of NVIDIA once before in 2019. The company resumed buying small stakes in NVIDIA in 2020, 2 years before the advent of ChatGPT ignited a historic rally. It disclosed that it increased its stake in the U.S. chip maker to around $3 billion at the end of March. It's done well just on that measure, because NVIDIA has gained more than $2 trillion of market value since then. That was a nice trade. And they sold into strength. Well, maybe they missed it by a day. But, okay. After a year dominated by artificial intelligence headlines, Wall Street's bull case is shifting towards something more fundamental to stocks. Earnings power that's beginning to broaden beyond big tech. Morgan Stanley, UBS, and other major firms are pointing to a clear through line this earnings season. Profits are strong, margins are stabilizing, and growth, while still concentrated in AI-heavy tech, is beginning to spread. There are clear signs that the earnings recovery is underway, and pricing power is firming, according to an equity strategist at Morgan Stanley. His team's data shows the so-called Magnificent Seven are expected to post 23% net income growth for the third quarter, compared with 12% for the rest of the index. But we see incrementally positive developments for breadth to eventually improve, as revisions trend higher and revenue beats remain well above historical norms. I mean, this bull rally we've been in for years, it's really ridden on the back of 7 stocks, the Magnificent Seven. You know who they are. Meta, Google, leaders. And that's a dangerous place to be, okay? Think of all the companies, all the stocks. I mean, just the S&P alone is 500 companies. The Dow, that's just 30 companies. They're the ones in the green today. But we're starting to see, I mean, 7 companies can't carry the load forever. So what they're trying to say is that we're starting to see some of the other companies out there start to shoulder part of the load. That's a good. Now, we've talked about online gambling recently. DraftKings got downgraded. BMO Capital upgraded Instacart to outperform from market perform. Corvo got upgraded from neutral to neutral from underperform with a price target of $93. JP Morgan upgraded Viasat to overweight from neutral with a price target of $50. Clear Street upgraded bullish to buy from whole with a price target of $57. Rothschild and Company upgraded Centus to neutral from sell with a price target of $184. And CBRE downgraded the DraftKings. JP Morgan downgraded CoreWeave. Morgan Stanley downgraded SPS Commerce. JP Morgan downgraded Mosaic. And UBS downgraded Forge Global. FRGE. Now, I made this comment the other day, and I'll make it again because I believe it's true. By the time one of these big bank analysts, a big brokerage firm analyst, gets around to upgrading a stock, it's typically near the top. And when they downgrade a stock, it's usually pretty close to the bottom. So keep that in mind. That might become part of your trade strategy if you're still trading individual stocks. I don't know why anyone would with access to the indices, but you do you. Okay. 1 year since President Trump, okay, we're going to move from Wall Street to Capitol Hill. 1 year since President Trump swept the swing states in the 2024 election, Democrats are starting to find their footing again. New York City's communist mayor-elect, 34 years old, appears to have breathed new life into the party. One of the biggest questions for national Democrats in the last few months has been whether they will endorse Mamdani. Young, highly critical of the Israeli government. He's an anti-Semite and enthusiastic about government intervention, such as city-run grocery stores and rent freezes. He won over 50% of the vote in America's largest city. Now, the governor of New York has said, I'm not giving him any money. Now, this is after the election. She says, I'm not giving him any money for free bus rides. I'm not giving him any money for free child care. You know, why didn't she say that before the election? Well, increasingly, the major figures of the Bill Clinton and Barack Obama eras are leaving the spotlight. Young politicians closer to Mamdani's age group are taking the stage. On Thursday, just 2 days after Mamdani's victory, Nancy Pelosi said goodbye. Her post was, or her tweet, "Thank you, San Francisco." She's 85 years old. She didn't give an explicit reason for retiring. Scott Wiener, a 55-year-old California state senator, has been exploring a run for Pelosi's seat. Jerry Nadler, who is 78 years old, also announced his decision to retire earlier this year as he faced a well-funded and much younger primary challenger. More Democrats could depart thanks to the Mamdani wing's momentum. Throughout the shutdown, Republicans have argued that Senate Majority Leader Chuck Schumer is motivated by fear of the progressive left flank of his party, specifically a primary challenge from Ocasio-Cortez in 2029. The government shutdown is another step closer to coming to an end after the Senate finally voted in favor of a bill to fund the government. Now, it's been on the table for 40 days, 41. All that was required was for the Democrats to just sign on the dotted line. They owned this shutdown. They will always own this shutdown. The Senate passed a measure that would fund the entire government through January 30th. Now we got to go through all this again. By a vote of 60 to 40 last night, 38 Senate Democrat caucus members, led by Minority Leader Chuck Schumer, voted against the measure still, despite the mounting pain and the longest government shutdown in U.S. history. Senator Rand Paul was the only Republican to vote against the measure. When is this guy going to get voted out of office? You know, he used to serve a purpose. He should start thinking about his own retirement. And after months of rarely being in session, members of the House of Representatives will likely return to Washington this week and help end the longest federal government shutdown in American history. It's not a done deal yet. Speaker of the House, Mike Johnson, celebrated Republicans' apparent victory. At least some Democrats now finally appear ready to do what Republicans and President Trump and millions of hardworking American people have been asking them to do for weeks. As we said from the beginning, the people's government cannot be held hostage to further anyone's political agenda. Shutting down the government never produces anything. Johnson then urged House members to rush back to Washington in order to vote on the bill. Hope they can get a flight. Looks like there's a big Trump-sized trouble in store for the BBC. On Monday, President Trump threatened the government-funded British Broadcasting Corporation with a $1 billion lawsuit over its broadcasting of an edited version of his speech near the Capitol on January 6, 2021. The BBC edit made it look like Trump was directly calling for violence that day. Now, we've all seen it. We know what he said. He said go peacefully. The Telegraph blew up the story after it revealed an internal BBC document provided to it by a whistleblower found that the clip was highly misleading to the public. The dossier said the program made the U.S. president say things he never actually said by splicing together footage from the start of his speech with something he said nearly an hour later. That's not all. The BBC Standards Committee also found that the media outlet had been rampantly publishing Hamas propaganda as fact. In the last 2 years, the Telegraph reported, BBC had to correct 215 stories related to the Israel-Hamas conflict, about 2 a week. To top it all off, the internal review found that a group of pro-LGBTQ+ reporters effectively uses its own censorship of the issue and clamps down on any reporting that conflicts with its worldview. This has led, according to the internal report, a constant drip feed of one-sided stories, celebrating the trans experience without adequate balance or objectivity. There's a whole lot of people that got tricked into this trans thing. Well, once you cut that thing off, it don't grow back. And my heart breaks for people who... I just don't have words. Victor David Hansen, senior fellow at the Hoover Institute, said this: the other thing is, when you have 12 million people coming in illegally, as discovered in the Yale study of 2019, I want everybody to listen to this because I get these people that write to me and say, you're just lying about illegal immigration. There was only about 6 or 7 million, and former President Joe Biden said there was only 5 million. And if you say 12, most of them were legal. No. We have at most 1 million legal people come in. And we have somewhere between 10 to 12 million illegal entries. We don't know if the entry is equivalent to a person, but it was probably 8 to 10 million people. And the Yale study of 2019, 6 years ago, said all of the estimates were wrong, and there's more likely 21 million people in this country sucking up your tax dollars illegally. Everybody remember, not a kiss, the kiss. Remember the guys with all the makeup? Ace Frehley, the original lead guitarist and founding member of the glam rock band Kiss, died of blunt trauma injuries to his head stemming from a fall, according to multiple reports. The musician died peacefully October 16th, surrounded by family in Morristown, New Jersey, according to his agent. In a no longer available Instagram post, freely described the fall as minor on September 25th. Our thoughts and prayers are with his family. Now, if you got YouTube TV, you probably noticed ESPN and ABC has vanished from the lineup. All Disney channels. Anyway, YouTube said if they couldn't work it out within a week, that they would give all subscribers a $20. So YouTube TV is now offering a $20 credit to subscribers after cutting off access to Disney-owned channels at the end of last month. YouTube TV viewers were left dissatisfied after Disney-owned channels, including ESPN and ABC, were removed from the platform October 30th due to the company's ongoing failure to reach a new contractual agreement. We know it's been disappointing to lose Disney content, and we want you to know how we deeply appreciate your patience. In light of the disruption, we're offering our subscribers a $20 credit. How do you get the credit? It's not automatic. Go to youtubetv.com on a web browser and sign in. Select your profile picture. Select Settings. In the left menu, select Updates, and then select Claim Credit. It's important to note that the credit is only accessible from YouTube TV's website, not the mobile app. Additionally, the credit only applies to next month's payment, not the current one. All right, that was a lot of news, man. Let's go to the local news. Logic 247. That's our 24/7 around-the-clock E-mini alert service. It's not just E-minis, it's also crude, gold, and silver. We're currently in week 380. Over the last 380 weeks, we've issued over 20,900 individual handcrafted alerts. And what we've averaged on a weekly basis is 20% or less of the alerts being stopped out based on simple market structure and a simple process we teach all of our passport holders. This week, so far, since the markets opened Sunday night at 6 p.m. Eastern, we've issued 32 alerts. When Valerie did the recap this morning at 6:30 a.m. Eastern, we were still waiting on the outcome of 15. That gave us 17 actionable alerts, of which so far 1 or 6% would have been stopped out. Again, just based on simple market structure and the simple process we teach all of our passport holders. Now, every logic alert has an entry price, long or short, an initial target designed to help you get your goal for the day, additional targets, and then a final trade to target. The purpose of the logic alerts is to teach you how to read a chart properly, okay? Now, yes, you can trade them. They're issued well in advance of being triggered, so you don't have to trip over your feet to get to the computer to try to get the trade on. I specifically build in time, okay? It's not like in the live training room in the morning where, you got a split second to get the trade on, okay? Now, you could still use that method to surgically execute with precision the alert, but when I put the alerts out, they're typically hours away from actually triggering. So yes, you can trade them, but the really important thing is that you use them to learn how to read the chart. Now, the logic alerts can come out anytime around the clock. Futures trade around the clock. We have traders around the globe. Our day session is their night session, and vice versa. But our original alert service Now, 380 weeks is a long time. It's over 7 years. But years before there was a Logic 247, we had our original alert service, the concierge trade alerts. Now, they're different in a lot of different ways. But for the purpose of this discussion, I'll just point out that they don't come out around the clock like the Logic alerts. They're posted as a static report shortly before the Globex Open each evening. This Tuesday session that we're in right now began last night at 6 p.m. Eastern. But all of our traders had all of these targets 5 minutes before the market opened. Now, as we go through these individual markets in granular fashion, you're going to see these targets drawn out on the screen. Just remember, if you were one of our traders, you would have had that number before the market opened last night. S&P 500, the Dow, the Russell, crude oil, the NQ, gold, and silver. So let's go to the chart. We'll start where we always do with the S&P 500 daily chart, the bellwether. Okay, now, here's today's candle, this little doji guy. It opened above the B. All right, let me back up. On Friday, we had the first candle open and close below the BBC since March 3rd. Price always reverts to the mean. In our case, the mean is green. We call it the BBC. Stands for bull bear cross. When price crosses below the green line, we're bearish and expect lower prices. When price crosses back above the green line, we're bullish and expect higher prices. Now here's the deal. You need a candle to actually open and close below the BBC for it to be official. Like over here. You see, we closed above the BBC on April 24th. But it wasn't official until the 25th when we both opened and closed above the green line. Now we've officially gone from bear, big picture, to bullish, big picture. Now notice the pullback held, the pullback held, pullback held until it didn't. Now that we're bullish, the pullback held, the pullback held, the pullback held. Here's a 3-day pullback that held. You see, all three candles are touching the green line. And then this pullback held, and this pullback held. I think you get the idea. The pullback holds more often than it doesn't. We even had a 6-day pullback that held. See, all 6 of these daily candles are touching the green line. So that means it held. Not only did it hold, but it sent us to go and put in new all-time historic intraday and closing highs. Then price pulled back to the BBC. And the pullback held for 1, 2, 3 days. And then last Thursday night, the market opened below the BBC. See that? We ran down and then we ran back up on Friday. So this is an official signal to go from bullish to bearish. But lo and behold, this is so unusual I can't even begin to tell you. I did say yesterday that we would probably bump our head up against red and falling, which is typically resistance. Blue and climbing's bullish, red and falling's bearish. And we did yesterday. But now we've actually traded a little bit above red and falling. So you'll notice that the low of today is not touching the BBC. It may turn out that we had the first faulty daily signal. I can't remember the last time. If this candle were right here today, if it closes without touching the green line, we're going to be back in bull territory. Now, where should you expect resistance if we keep moving higher? Right there, 69.08. And after that, the all-time historic high, 69.5375. Now, we got a doji that represents indecision, but again, things look pretty bullish. So if price were to somehow sell off going into the close and getting us back to the BBC, see, this is going to create a bullish signal if we don't touch the BBC. So all we can do is wait and see what happens. Okay? All right. Meantime, we'll trade what's in front of us, which is kind of tough on a day like today when the market is waiting on something. Now, all alerts are created on the 30-minute chart. Nothing magic about 30 minutes. It's just the time frame I chose years ago, and I'm stuck with it. The vertical line separates today, Tuesday. Over here is Monday. The horizontal lines are the weekly trading zones. They're published every Monday morning at 6:15 a.m. Eastern. Once they're published, they're carved in stone for the entire week. They don't change in any way whatsoever. Now, when price rallies up to a weekly trading zone, we expect resistance till proven otherwise. When price drops to a weekly trading zone, we expect support until proven otherwise. So we caught a rally yesterday afternoon, and we spent an hour consolidating at the zone, which is 68.41/42. That was also a zone last week. That happens sometimes. Okay. One of three things happens when price encounters a weekly zone. 70% of the time, it's going to be consolidation, which can often be just two candles, like this and like this. Or it can be like this. I mean, we got down into the zone, remember, 68.41/42. So from the London Open, I mean, well, you can see it. We just consolidated all night. We're finally starting to climb. Okay, where should you expect resistance? Right here, 68.68. Now that's 5 points higher. Then you got the CTA long target. Of course, the short target, I don't suspect we'll see that today. We've published the zones. The 14th of next month will make 16 years that we've published the zones for our members every Monday. We still have one more zone overhead. Okay. So we had a pretty big gap higher open Sunday night, not as big as some we've seen lately, but that was the Sunday night gap higher open. Okay. Consolidation at the zone, and then an attempted rally, then support at the zone, then resistance at the zone, and then we break through, and this resistance becomes this support. You get the idea. But now, market's trying to rally, but I'm telling you, this spot right here, 68.68, could potentially be good resistance. Now, if we break through 68.68, then I suspect we will see the long target at 68.81/82. I'm sorry. I'm thinking zones. The zones have two numbers. I just put one of the lines because I like to keep my charts clean. Of the Dow. Remember the Dow when I gave you the numbers from around the world? That was the only one that was really in the green. I guess the S&P is in the green now. This was the opening candle last night. Yesterday, we had resistance at the zone, resistance at the zone. We finally broke through and got resistance at the zone. So we consolidated just flat overnight. And then at 9:30 this morning, the 9:30 Wall Street open took us right up to the long target, to the tick. True story. Now, I'll show you why if you want me to. Look at the horizontal line on my cursor. See this high right here? This was back on November 5th. Okay. People always ask me, how far left do you have to look? As far as you need to. Okay. And we hit it. Okay. Now, using the same logic, where's the next spot for resistance? We've already overcome that. So now on the Dow, you should expect resistance at 48.075 and then 48.180. That's if it keeps climbing. Okay. That's called market structure. That's how you read a chart. Okay. Now this is the highest weekly trading zone this week for the Dow. Unusual to be so close so early in the week, but here we are. Have there ever been weeks where we closed above or below the highest or lowest weekly trading zone? Yeah. 16 years times 52 weeks. I'm going to say 30, 40 times. I don't know, 20, whatever. It's happened. But for the most part, like last Friday, all four of the major indices dipped below the lowest weekly zone. But by close of business this past Friday at 5 p.m. Eastern, every one of them was back above the lowest weekly zone. So we opened, we hit the target, consolidated a little bit, and we're still climbing. Those numbers I gave you, keep them in mind. The Russell. Yesterday, the Russell, this was a gap higher open into resistance, consolidation, and we got a leg and a retracement and a leg and a retracement. And then we just went flat at this zone all night. And now the Russell's trying to wake up. So where should you expect resistance on the Russell? $24.70. After that, $24.75. I forgot this one. $24.72. You got $24.70, $72, $75, and $76. Okay. Will we see the long target today? Maybe not. I mean, this is very unusual, guys. I don't know how new any of you are to the markets, but what's the market waiting for? At this point, I think for the government to reopen. ENQ. Yesterday, we had a run up, and then we had a pullback, and see how price found support at the zone to the tick. Support will always send the market looking for resistance, which it found at the zone. And it consolidated, as it does, 70% of the time. 20% of the time you get rejection, 10% of the time the slice. That's when a 30-minute candle slices through a zone like it's not even there. But when it runs out of steam, it will typically retrace back to the zone it sliced through and continue in the direction of the slice. So we got a bearish cross right here. That's where the red line gets below the green line. And it took us right down to the short target. Short target, simply based on this right here. See it? We hit it, bounced, hit it, bounced. Now we're above the VBC. Where should you look for resistance? Possibly 25,679. And then right where that bearish cross happened, 25,693. And then 25,705. Then you got the zone. And then above the zone, you got the long target. These markets are just clownishly flat. Michael, is that you?
That is me.
Oh, I didn't know. You were kind of quiet.
That is me. I'm here.
Okay. All right, guys, we'll pick up with crude. We still got crude, gold, and silver to go over. But for now, Michael's going to take control and give us a recap of what happened in the live training room this morning. Do a little live trading if he has time. Then I'll come back, finish the recap that I was doing, and close things out with our good word for the day.
All right. Yeah, I just got an alert that I had set this morning. I don't know if you saw me do that.
I didn't.
I set this alert this morning called "Not Outside Day." It's supposed to say "Not Inside Day" anymore.
Oh.
That's what it's supposed to say.
Yeah.
Let me fix it so the message is right. Not inside day anymore. Inside day anymore.
Yeah, I mean, we got on Friday, we got that big picture bearish signal, and it looks like today we're going to get a big picture bullish signal. I can't remember. I don't remember that ever happening before. Yeah, no, I just don't remember it. So maybe it did, maybe it didn't, but it looks like that's what we're facing.
Yeah, well, that's it. I had drawn this blue line in this morning when I said that. And I said, we got to get up above that. So it's not an inside day anymore. And the alert in here in the log, here it is.
Boom.
1257.41, not inside day anymore. And this one as well. It hit it twice. So it fired off that alert. As soon as we got up above this level, if you look at the big picture, out here, we got up above this level. The high of yesterday was right there. That's what happened. The high of yesterday. This one was the high of yesterday right here. That was the high of yesterday. And we just got up above that. So that's good. Now, I had done this projection yesterday. I think I did it during this session yesterday. By the end of the month, this is 7,000. Probably is what I'm thinking by the end of the month, if it doesn't happen sooner. But that's what the price action is suggesting is going to happen here. You know, this is the bar you were talking about right there, and this right here is.
Yeah, I'm talking about the bar that opened and closed below the daily VBC.
Yep.
Yeah.
This guy right here, that red one. If I move this over for a second,
you can see it.
Right here.
Yep. And now it looks like we're going to get an opposing signal that says no, we still got more to go. Yeah. So. Interesting. Yep.
Interesting times these are.
And I think what the market's waiting for is for everybody to get back to Washington. I mean, the Senate voted last night. We finally got enough Democrats to sign off on the thing. But now the House of Representatives has got to approve it again. So hopefully they can all get a flight that won't be canceled or delayed. And
right. It's 1,100 work today.
Yeah. So they can actually get back there and vote properly. So, of course, Hakeem and Schumer, they're going down with the ship. They refuse to cave. They're mad. They're real mad.
Well, that's okay.
And Nancy says, I don't care anymore. I'm going to go spend my trillions of dollars I made insider trading. So
that's right. I mean, when it comes to the markets, just say, what did Nancy do?
Yeah. Right. If I was on one of those sites where you copy people's trades, I would call myself Nancy P. Boy, That would probably attract a lot of
yeah.
a lot of interest.
Yeah.
All right, I'll turn it over to you.
All right. Okay. All right. So here we go. We'll start here. Hey, has this gotten any better? A little bit. All right. So if you have not, good afternoon, everyone. Sorry, let's start off there. Good afternoon, everyone. Today is Tuesday, the 11th day of November 2025. It's Veterans Day. Hey, congratulations, all you veterans. Thank you for all your service and all that. And it's Veterans Day. So we made it to another day, another Veterans Day, through another year. If you have not taken a free trial and you want to, click here, sign up right there. There's no credit card required for the trial. Just click on that purple button. It's going to bring you to this registration page. Just fill it out. Gives everything that we ask for in this page, especially this one right here, Preview Login ID. If you give us that, then we'll get the indicators indicating on your desktop, which is ideally what you want to have at the end of the session, the beginning of your trial, actually. So we had a pretty good day today. We got the goal for the day pretty early, which is always nice. And we ended, I think, on the gold. We did not end at the high of the day, but on the YM, we did not end at the high of the day. On the ES, we did, and on the NQ, we did not. Okay, so I guess it wasn't as good as I thought. On the NQ, we ended with 154 ticks, but at the high of the day, I think we're at 179. And on the YM, we ended with 18 ticks, and the high of the day on that, we're at 33. On the gold, we ended with 9 ticks, and the high of the day on that, we're at 40, I think. Yes, 40 was the high of the day on that. And on the ES, we ended with 27, and that was the high of the day on the ES. All right. But overall, we ended up with $1,287 per contract. It took 4 minutes and one trade this morning to get to $1,000 with 10 contracts on, or $100 with one. And we took a total of 60 trades. Most of those were on gold. And we had 7 stop outs again. Most of those were on gold. And so that means 88.3% of our trades this morning were break even or better. On the month now, that puts us at $5,167 over 4 trading days, averaging $1,291 per contract per 2-hour trading day. On the year, we're at $235,980. That's over 194 business days, averaging $1,216 per contract per 2-hour business day. Now, if you were to quit trading when you get the goal for the day and you add 1 contract per month, so far this year, you'd be at 27.23 hours if you did it just like me. You'd be trading 11 contracts. I'm stuck with 10 all year, but you'd be trading 11 contracts and you'd be up $184,362, averaging $6,769 per month, right? I'm sorry, per month, per hour, yeah, per month. That's a big difference. That's per hour. My thoughts just got crossed there in my head. Anyway, that is the 24/20 blueprint. All right, let me just see who's in here. Let's see if that is new to anyone. I don't think that it is new to anyone who's in here. It is not. All right, so let's get into the actual trades. I'm going to come back to gold because that's where we had almost all our trades today. We'll start out with the YM and control and back. All right. Right here, our first trade on the YM, we picked up 1 tick. Then we had a break even there, and then we picked up 10 to get us to 11. Then 5 to get us to 16, then 10 to get us to 26, and then 1 to get us to 27. And it was all going so well. Every trade was a little bit of a winner. From 27 to 30, then 30 to 32, then 32 to 33, and then stopped out, brought us down to 18. We had 1 more trade here at the end of the session, and we didn't get anything out of that one. That was it. So we ended up with plus 18 on the YM, plus 18. Let's see. The break, we had 1 trade right there that would have worked out just fine. 1 trade right there. That's not really a flat spot there, but it's kind of, if you took that, you would have stopped out for sure. This was not a trade. This, not a trade. this right here was a decent trade right in there. And you just need no close on this one right here, and you'd have another trade right now on the YM. When you have a green midpoint like that, you're looking for a close above that green midpoint as it comes down to the oversold. Okay, that's what you're looking for when you have a green midpoint. Now, I only have that actually turned on this one chart, but it is available on all the charts if you want to turn it on. I guess I have turned on here to it's blue here instead of green though. So that right there on the YM is a trade. Now the YM, the high of the day is right there on the YM. So the swing high that you're seeing right there is the high of the day. I just went long on that one, by the way. The high of the day on the ES is right there. And I think we're a long way away from the high of the day on the NQ. But, so we are long the YM right here. I don't have, no, it's not a bad fill. The ES does not have a trade right here, but let's get into the trades that we did do with the ES today. Okay, start here and hit control and go back. Control and go back. Here it is. Still in that YM trade so far. Right now on this one, this was our first trade on the ES, and we picked up 2 ticks on the first one, 2 ticks on the second one, 1 tick on the third one. So at that point, we're up to 5. And then over here, we finally get a little bit of something. We got 6 ticks on that, got us to 11. Then 4 to get us to 15. Then from 15 up to 21, so we had 6. Then 21 to 27, so we had another 6. I just stopped out on that YM trade. Okay, now you can see in here, this is when I set that alert right here. So you get the little alert thing right there. When I set that alert this morning saying this is where we need to go to get in. Do not have an inside day. And that alert that I was just talking about with Dwayne is right here. It said not inside day anymore. And if you click on that, does it say when I actually set it? 11:30:15. I created it 11:30:15. So it was right here that I actually created it. And I said, once you get there, once it gets above that level, it will not be an inside day anymore. Look, I just did it again. Not inside day anymore. What that means is it just came from below it and went back up above it, or it came from above it and went back down below it. I think I have it just saying crossing. I click on that, it's just crossing, so it's just crossing that level. So if I do crossing up and I save it, then it'll only trigger when it crosses up above it. Okay, so if I go out here right now, it probably just crossed. Yeah, it just hit it right here. That's what happened right there. Now, I just skipped over all the trades that happened during the break, right? So in here, this is the ES trades that happened during the break. There was a short right there that eventually I think would have given you a break even right over here. Okay, there was no long through there. Long through there. All the way through here. All the way, all the way, all the way. Right here, there was a long. That would have worked out to something. And that was it. That was it. Now, I was thinking yesterday about buying micros, and it was down here at 6,800, but I didn't put it all together. Just got distracted. Anyway, so on the ES, we were up 27 ticks this morning. All right, and now the NQ. And we did have some stop outs on the NQ, so we're back and forth a bit. On the NQ this morning, I'm going to hit control and back. And all right. So here we are. This was the first trade here, and that wasn't even off the midpoint. I ended up with a break even off of that one. The next one on the NQ picked up 16 ticks there, then went from 16 to 61, so we had 45 ticks there. And then we had a break even, and we went from 61 to 106, so we had another 45 ticks there. And then we went from 106 to 107, so we had 1 tick. Then 107 to 112, so we had 5 ticks. Then we stopped out. That put us down to 87. Then we had another 45 right there. That got us up to 132. Then we went from 132. That was 17 there. That was kind of an odd trade that I did. It was 17. Got me to 149. Then went to 157. Then 157 to 165. 165 to 171. 171 to 178. 178 to 179, and that was the high of the morning session right there. We're at 179 right there, and then I stopped out. I put us down to 154, and that is where we ended up for the morning session, at 154. Now, let's see. We had during the break, so trade right there that eventually would have been a break-even trade right in here. I think that would have been the trade right there that gave some profit. This would have been a trade right here that gave some profit. This would have been a trade right here that would have been a break even for me. This was not a trade. Okay, that was not a trade. That was not a trade. It was kind of odd the way that came together because it was a down close when it came out of the oversold. So that wouldn't have been anything for there. That was a trade there. We gave some profit. That was a trade there that would have been a break even. Looks like the midpoint was not flat. Nope, that was back here. This would have been a trade right there that would have given some profit. This would have been a trade with some profit. This would have been a trade with some profit. This might have been a stop out or it might have been a break even. Depends how far it went and where you filled. This would have been a trade with some profit. And that is it. All right, so let's not forget that so far in this session, I've had one stop out on the YM. Okay. But that was it on the NQ. So we ended up with, on the NQ, 154 ticks. Okay. Now we move this over here and get into the gold trades right now. Let me mark up that one YM. I'll just put it in here. All right, on the YM so far in this session, we had minus 15 ticks. Okay. So minus $75. Let's look at the gold now. Let me hit control it back because there was a whole bunch of gold trades today. Here we go. All right, our first trade of the day was in gold. This we've got the gold for the day. We got 10 ticks on that trade right there. And then the next one I kind of messed up, and I took it twice and I got profit on both of them, but one was 20 something and the other one was 2, I think. It's like 23 ticks and 2 ticks or something like that. It became a total of 25. So we ended up going to 35 there. Then I had a break even, then another break even. Then I took this trade. Now there was a problem with that trade. I took it and I got 22 ticks. No, 2 ticks, just 2 ticks on that, it looks like. Why wasn't that a trade? It hadn't come out of the or sold on that bar. That's what it was. I got 2 ticks on that one, then a break even. Then I stopped out on that, and that was a mistake. Because why was that a mistake? I don't remember why it was a mistake, but I stopped out on that one, and that brought me from. There were a couple of trades in there I didn't point out. There went from 10 to 35, 35 to 37, 37 to 40, and then the stop out was 40 down to 20, 25. And then we went from 25 up to 26. Then I believe we stopped out again right there. We did. We went from 26 down to 9. Then we got to 12. And from 12 to 16. And 16 to 18. Then we had a break even, another break even, another break even. And from 18 down to 3. Then we went from 3, we had a break even. Then we had a +1, we went to 4. Break even. Then +2, we went to 6. And the 10 went to 16. Then a 6, I think I went up to 22. And so we were kind of at respectable numbers again there, and then bang, another stop out. That put us down to 7, and then we got 2 more right there to get us to 9, and that's where we ended it on the morning session. So gold was difficult this morning. Now during the break, let's see what we had here during the break. Was that a short? That was a short right there. Would have been a break even. That was a long right there. Would have given some profit. Long right there would have given some profit. A short right there. Didn't really go anywhere. A short there. A long there. That wasn't actually a short there. That would have been right there. That would have been a nice trade there. And it brings us all the way over to here where we don't have anything right now. We could have a trade on an up close right now on the gold. It's kind of ugly the way it's all coming together, but now I don't think it's going to be. It's 18.1 and the midpoint is at 18.9. It could just barely be a trade here on an up close on the gold. Okay. So we ended with gold with just +9 ticks. The high on gold during the session was 40, I think. Yes, it was 40. All right, so this is all we have going on here. Gold did actually give you the up close, and it was 1 tick below the midpoint. So it's not really a good valid trade in there. You want it to be on or above the midpoint when it closes up and comes out of the oversold. Okay. There's no trade here on the YM because we weren't off the midpoint. No trade here on the S because you weren't off the midpoint. And no trade here on the NQ because you weren't off the midpoint. Bring up the question box and see if anybody does me a question. Usually you guys are pretty quiet in here. Yes, you are indeed quiet. So this did not finish the cycle over here on the NQ. All right, so I am just waiting here for something to happen. That would be a trade. This is not one here on the NQ. It's going to go full cycle. All right. Gold is starting to move. If you took this long trade over here, the gold is starting to move. You would have just gotten out to break even if you'd have taken it. I think it went enough to get the stop to break even. Okay, the NQ is starting to move down a little bit. Just flip the YVR. So that needs to pull back up, hit the midpoint, keep it down close. Almost there. It's got to hit. It's not going to happen. I don't think we're going to get down close and pull it out of the overbought before we hit the midpoint, I think. The gold needs to give a down close and then an up close. The down close to get down to the oversold and at the midpoint, and then an up close to get it out of the oversold. Okay. Okay. Oops. You can do that, but I guess we'll go with it. On the NQ. We want an up close to hit the midpoint, get into the overbought, and then a down close. Right now, a down close on the NQ would be a short. Okay. There it is on the NQ. That's short. And it just bumped my stop. So lock in 1 point. 2 points. 4 points. Okay, so that puts us at about break even right now on this session. We're up $5 on this session right now. It's going to give an up close followed by a down close right now to get another trade on the NQ. And this is no trade here. The gold just flipped the YVR. So could have something over there. We need an up close followed by a down close on the NQ. And the gold flipped the YVR. Okay, the gold now needs an up close followed by a down close. NQ needs the same thing. There's the up close, there's the down close on the NQ. Okay, there's NQ. Stock just went to plus a tick. Look at a point, 2 points, 4 points. I don't even know how many points that is. Down to 30. This can give us all 45. There it is, give us all 45. Okay, so
very nice.
That was right there. Yes, put that in over here. It's 45, 55, 61. Okay, back here. This is too high now. You're not going to have a trade here. The gold didn't pull back deep enough to give us anything there. Wow, it's 128 already. Not going to have a trade there. And well, we did get positive. After that one stop out on the YM, we did end up positive. So that's good. So most of these sessions, these half-hour sessions that we do from 1 to 1:30 when I do the trading in here, most every day, if you guys just show up for this and do the trades that happen in here, most of these sessions ends up being positive sessions. If you can't get there for the morning.
And the NQ is about to flip
the
YBR.
It's
close.
I think this bar is going to flip it. But let's look at this on the bigger picture. Let's crunch it up and see what happened right there. Okay, so if this from here to here was a leg up, then this area right here is about a 50% retracement of that leg up, I believe. Right, if you go from there to there, it's right here at that 50% mark that it's bouncing off of in the bigger picture. So when we get really close to the YBR like that, I like to
and it flipped.
Check out. Yep, I'd like to just check it out like that, crunch it up so you can see what the bigger picture looks like. And I guess that's probably going to wrap it up.
Looks like you got a potential long trade just about to set up on the EQ.
Yep. One here, potential. On the ES, you need 2 down closes. On the YM, you need 2 down closes. And the NQ is pretty close. The down close on this one's not going to be, it's not going to hit it, but the next one could hit it with the wick and give you an up close. So that could happen. We'll give it a second here. We'll see. Okay, there it is. Okay, so now you just need the up close. This has got a low of 38, so you'd be buying 43 right now, like this, just like that. And there it is, we're in, and well, it moved down pretty quickly there, but you see it got us in right at 43, and now it's going to break even plus a tick once it hits 10. There it is, break even plus a tick, get them out with one tick. And that's the whole process right there. Gold is about to give a short too. Just see what happens with gold. We'll follow the gold through. Well, I don't know if you have time. But.
So you're hovering over that current candle that's printing, and it's giving you
this one?
Yeah. Remember the other day I asked about that? When I hover over that candle, it doesn't give me anything, but if I hover over...
I do remember you said that the other day. And you know what? I think it didn't work the other day for some reason, but now it is.
Okay.
Yeah, I don't
well, that's good. I'll test it out. I'll test it out on my end here when we're all done.
Okay. Well, I run over a little bit. So let me just say this. If you haven't taken a free trial with us, go here to mytradingiq.com, click on the purple button. There's no credit card required for the trial. Click on that purple button. It'll bring you to this registration page. Just fill it out. Right. And in this session, we ended up with 62 ticks on the NQ, minus 15 on the YM. So a total of $235 per contract session. All right. Not bad for half an hour's worth of work.
10 contracts, that's $2,300.
$2,350, sure is. That's it. These sessions are worth coming to, I think. It's going to have another one here on the NQ on an up close right now. Everything else that's going on here, everything that Dwayne shows you, the bigger picture stuff, it's good information for free. I'm actually in that gold right here too. My stop is going to break even on that. Because my stop is a break even. Oops. I don't know what the heck I did with that. This is my stop right here now. So my stop is at plus 14 ticks. There, I'm out. I messed that one up somehow. But that's it. With that, I can pass it back up to fabulous Phoenix, Arizona, in Studio A overlooking South Mountain. The S just had a trade. The YM just had a trade. And the gold had a trade a minute ago. So, good stuff.
Okay, recap of the morning session.
Today it took 4 minutes and one trade to get to $1,000 with 10 contracts, or 100.
Good job.
Thank you. Thank you very much.
All right, guys, we're going to pick up where we left off. We're already up to crude. Now, we already did the ES, the YM, the Russell, the NQ. If you missed that part, as soon as I sign off, you can go to youtube.com/CFRN, and you can watch today's broadcast in its entirety. In fact, on our YouTube channel, there's over 2,900 daily episodes archived for your educational and viewing pleasure. So on crude, the vertical line, of course, separates today, Tuesday, from Monday. Now, Tuesday began last night at 6 p.m. Eastern. And these these concierge trade alerts, the weekly zones, all of our members had those yesterday morning at 6:15 a.m. Eastern. The CTAs, all of our members and trial members, had those 5 minutes before the market opened last night. 5 minutes before this candle began. So we come down to the zone and get support. That's what we expect. 70% of the time, when price encounters a zone, you're going to get consolidation, which we got. Then we get below the BBC. We got red and falling. That's all we need to go short. And it takes us right down to the short target, to the tick. Now, you see right here, where red turned to blue, to the tick. Support will always send the market looking for resistance. So the pullback to the zone and the BBC held initially. Then we punched through it. And then right here, ran all the way to the next zone. which we expect to be resistance. When price drops to a zone, we expect support till proven otherwise. When price rallies up to a zone, we expect resistance till proven otherwise. That's how it's been now for almost 16 years. December 14th of next month will mark 16 years that we've published the zones for our members every Monday. So we consolidate for a few hours here at the zone. Then we get a leg, a retracement. Now the zone right here is 60.35/60.40. So we pull back to the zone and get support, and that sends us right up to resistance at the next zone. So we back off, make another run at it. We get above it, pull back to it, good support. Sends us up to the high of the session, which is 61.28. Now, remember, when the price of crude moves $1, that's worth $1,000 per contract traded. So we're at 61, what are we at right now? 61.04 roughly. So at 60.04, from right here to here, that's $1,000 per contract traded. Now, the step line, when it starts arcing over to the right like this, that's when you should expect a retracement back to the VBC. And I think that's what we got coming. Now the zones, once they're published Monday morning at 6:15 a.m. Eastern, they're carved in stone for the entire week. They don't change in any way whatsoever. On Friday, every one of the major indices, the S&P, the Dow, the Russell, the NQ, traded below the lowest weekly trading zone. But by close of business Friday afternoon, 5 p.m. Eastern, every single one of them was well above the lowest weekly trading zone. So that's the power of the zones. Get them on your chart before Wall Street wakes up for the week every Monday morning. And you're good to go for the entire week. Because, again, once they're published, they don't change. So we'll look for a retracement back to the VBC and then potential resistance at the zone. If price, now the pullback holds more often than it doesn't. But what if price trades through the VBC? Well, you got potential support right here, 60.55, and then your next support is at the zone, 60.35/60.40. This zone is 60.90/95. The highest zone for the week is 62.75/62.80. Okay, gold. This is the opening candle last night. So we opened well above the VBC, and we've got blue and climbing. So we expect higher prices, and we hit the long target. The second 30-minute candle. This was the opening candle last night. This was the second candle, and we hit it. We opened last night at 41.24. So that's a $600 move up to the target. And then it kept going. Now you see how it ran into some resistance at the zone, consolidated a bit, punched higher, and pulled back to the VBC. Pulled back, held for 1, 2, 3, 4, 5, 6, 7 30-minute candles. It attempted higher, but it failed to take out the early high. But notice that this high right here, this candle right here, see the high? See right there where blue turned to red? You should expect resistance there. And you got it. It sent us back to the zone support, which bounced us back up into that same resistance area. And then that took price below the VBC. And we found support right here. Now, I want you to look at this. You see where the black step line crossed blue and climbing? It went from the right side back to the left side. That creates an important price, important area. Now look at the horizontal line on my cursor. See the double bottom? Right there to right here. So if you're in this short trade coming down, you should know to expect potential support right at that area. And you got it. Step line is crossed red and falling, so we should see a retracement back to the BBC. And last but not least, silver. Here's where silver opened. You only need 2 pennies in silver to get your goal for the day. We opened the evening last night. We opened the Tuesday session at 50. We'll call it 50.45. So up to the target is $1,000 per contract traded. We got a little retracement. We made another run at that zone. See how the zone held it in check, held it in check, held it in check. Got above it, pulled back to the VVC, pulled back, held, and it held, and it held, and it held, and it sent us up to put in a slightly higher high. Now, we're always suspicious of just a little bit. And we turned back down. We got below the VVC. This low, if I look left, it's not an area that I would have called for support. Okay? There's just, think of it this way. Over the last 7+ years, we've issued over 20,900 individual handcrafted alerts. And what we've averaged on a weekly basis is 20% of the time or less, the market has done something other than what we expected it to do. In fact, this week, we're sitting at, I think, 6% stopped out, I believe is the number. So far, it's early, it's just Tuesday. So buyers came in here for whatever reason, okay? When I don't have a solid technical reason for you, I'll just tell you. Because I know that there are going to be times when the market does something other than what I expect it to do. At this point, I would have expected to continue falling to right here. You see how this candle has a wick sticking up and this candle has a wick sticking down? So you put that cursor right in the middle. 50.06. That's where I would have expected support. Buyers came in early. They can do that. So now we're above the highest weekly trading zone on a Tuesday. And if this move continues higher, where should you expect resistance? 50.94, 51.06, 51.09. Remember, you only need 2 pennies to get your goal for the day. One last look at the big picture on the daily. So Friday, we had that bearish signal. And now it looks like today we're going to get the reverse bullish signal. That is, well, how unusual is it? The last time we had a big picture bearish signal was on March 3rd. The last time we had a big picture bullish signal was April 25th. And from now, that bearish signal led to this. That bullish signal opening and closing above the VVC. Oh, we had lots of pullbacks along the way, but every one of them held. Every single one. Price always reverts to the mean. In our case, the mean is green. Call it the BBC. Just stands for bull bear cross. Price crosses above the green line, we're bullish. When it crosses below, we're bearish. So we opened and closed last Friday below the BBC, which, based on all of our years of doing this, we would be expecting lower prices right now. But we're about to get a bullish signal. See, we opened, and it looks like we're going to close without touching the green line. The exact opposite of what happened on Friday. Just keep in mind this area I gave you earlier, 69.09, 69.07 to be safe, as potential resistance. Okay, 69.07. All right, okay. To become a member, email Valerie, support@cfrn.net. Just let her know you want to become a member. She'll send you the information you need to get signed up. Once you're all signed up, she'll send you a bunch of stuff. You won't know what to do with most of it. Create a folder in your email client and just put everything in that folder. This way, you're up working in the middle of the night or on a weekend or a holiday and you need something, it's going to be in that folder that you created. If you drag every email from her into that folder, you'll have everything you need. Okay. Now, once you're an official member, a passport holder, you get 2 hours of live training every trading day. It's an interactive environment. So we don't just sell you some indicators, give you some kind of PDF and party slap on the back and wish you luck. We're in the trenches with you every single day. From Sunday night at 6 p.m. Eastern to Friday afternoon at 5 p.m. Eastern. 2 hours of live training every trading day. But we keep working around the clock. Private one-on-one mentoring. No extra charge. All you got to do is ask. The strategy you learn, the indicators you own as a passport holder are fluid across all markets and all time frames. Maybe you're a stock trader and you've been watching this and you're like, dang, it's pretty awesome on those futures. I wish it worked for stocks. Guess what? It does. Really? What do I got to change? Absolutely nothing. Same indicators, same strategy works not only with futures, but with stocks, crypto, Forex, ETFs. How's that possible? Price flows the same across all markets and all time frames. From support to resistance, back to support, back to resistance, over and over again and again. It's a never-ending cycle. That's why it's so important that you learn how to read the chart properly so you know where to anticipate support, where to anticipate resistance, and accept with grace and dignity that 20% of the time or less, the market is going to do something different than what you expected. One of our members made a remark the other night in a members-only workshop, or maybe I was in a session with him, I forget. And he said, you know, you've been telling me this for a couple of years, but I finally have come to accept this fact. I said, what's that? He said, there's nothing I can do to keep from getting stopped out. That was his breakthrough moment. I don't care. I don't care how good you are, how good you think you are, how fast on the trigger you may be. If you trade for a living, you will get stopped out. Okay? Period. Getting stopped out is as much a part of trading as breathing is a part of life. There is no mechanism, no indicator, no oscillator, no AI, no nothing, not nowhere, not know-how that can tell you with 100% accuracy what's going to happen next in the market. There's too many factors. It's just not possible. Stop wasting money, time, and treasure chasing, looking for something that cannot exist. It would defy the laws of physics and science, even God. So if that's you, stop. You're not going to find it. As a passport holder, you'll get the Logic 247 alerts around the clock. That's what's going to help you learn how to read the chart. You get the concierge trade alerts the second they're published each evening, typically 5 minutes ahead of the Globex Open. Every Monday morning, 6:15 a.m. Eastern, you get the weekly trading zones. And every Thursday night, you're able to attend the members-only workshop. Last but not least, you get the golden keys that open all the private channels in Telegram. There's a bunch. Everything a trader needs, all under one roof. One low price. How low? $5,000. $49.97 to be exact. Now, view that through the lens of all the time and treasure you've spent trying to learn how to trade. And it's probably just a mere pittance. Ball's in your court. If you really want to learn how to trade, if you're willing to show up, do the work, and actually learn. This isn't some magic trick. This isn't a parlor trick or a magic act. No. This is learning to read the chart, understanding how price flows, and then making proper trades based upon how price is flowing and what our humble set of indicators are telling you. It's not rocket science, I promise you. If it was, I wouldn't be here. So, let's wrap it up with our good word for today. What do you say? What do you say? G in the discussion group said we're about to hit the CTA long target at 68.81. Thanks, G. All right. Good word for the day. God has a plan for your life. We are God's masterpiece, planned long ago. Ephesians 2:10. A minister writes, "To the average eye, it was a mutilated piece of marble. The aborted sculpture had been abandoned a half-century earlier, but a young artist named Michelangelo saw something in that stone others did not. Chiseling the 18-foot block of marble would consume nearly 4 years of his life. But that seemingly worthless stone was destined to become what many consider the greatest statue ever sculpted. Michelangelo resurrected a dead stone and, breathing his artistry into it, brought David into existence. As he chiseled, he believed the masterpiece was already inside the stone. All he had to do was remove the excess stone so David could escape. He didn't see what was, he saw what could be. He didn't see the imperfections in the stone. He saw a masterpiece of unparalleled beauty. There's a story that someone asked him once, "How did you do that?" And he said, "I just chiseled away everything that didn't look like David." And that's precisely how the artist God sees you. We are God's masterpiece. He has created us anew in Christ Jesus, so we can do the good things He planned for us long ago. Ephesians 2:10. Every work of art originates in the imagination of the artist. And so you originated in the imagination of God. You were conceived by God long before you were conceived by your parents. You took shape in the imagination of the Almighty before you took shape in your mother's womb. Regardless of what others think of you or what you think of yourself, God sees you as a potential masterpiece. To see yourself as anything other than that is to devalue and alter your true identity. And it's in discovering your true identity that you discover God has a plan for your life. And that's our good word for today. Thanks so much for tuning in. Whoever you are, wherever you are, may God continue to richly bless you with His mercy and with His grace. And I'll see you at the bell.
Remember this, there is no greater return on investment than to see a human life changed and given hope. As always, pray hard and trade safe. Any financial information discussed on this show is simply the opinion of our host, Dwayne Reeves, his co-hosts, and guests. To learn more about trading E-mini futures or to take a 1-week free trial in our live trading room, call 1-866-928-3310. 866-928-3310. Information discussed on this radio program should not be construed as a recommendation to buy or sell any security. Always do your own due diligence and consult with a licensed securities broker or financial planner before making any investment decision.